And of course, the private test worked no problem. But at this point, I'm just happy to have the live stream going, you know. But just to show you guys something real quick, I did think it was pretty hilarious. We're at almost 100% dark pool usage on a lot of foreign exchange, precious metals, equity, and credit, especially places like HSBC and Morgan Stanley. I thought that was just ridiculous. But yeah, again, this is Boss Blunts. My name is Marcel Klinovich. Thank you everybody for coming through, and we'll do like an open AMA, an open Q&A session if you guys want. I know some of you have seen some of my other videos that I did with Jackson Hunter, Houston Wade, as well as Jamie from Trade Spotting was on the last one. I've done other ones with Dave from Dave's Daily Trades. They were all a lot of fun. You know, I just wish we were talking about a more fun subject. Of course, the AMC and GameStop portion are a lot of fun for me, and I hope for you guys as well. But it's the whole economy and stock market tanking. That's not a whole lot of fun to talk about. But I figure somebody's got to discuss it here, so we might as well try to bring it up and just let people know as to what's happening and why they should be prepared. Did you see Attack on Wall Street? That thing was pretty cool. There's some really great documentaries out there. You know, like what's going on right now is really reminiscent of 1999, because back in '99, Congress and Senate were arguing literally about the same exact thing with these swaps and issues that they were having, except back then the derivatives that these banks had that they were complaining about was $33 trillion. And as you guys know now, we're at almost 190 trillion with everything getting kicked down the can from 2008 and so on. So it's interesting times ahead with that number being such a big problem back then during those market crashes, and now having 6x or whatever it actually is, 7x. Yeah, thanks again everybody for coming through. I've never done this before as well, so if you have any issues, please let me know in the chat. I have live chat set up. Feel free to throw any questions you might have my way. There's all sorts of DD that we jumped into on the last few. And I think one of the real important things here is that, credit default swaps being so heavily over leveraged is just to the tune of 5,000% increases between banks and holding companies, which are shell companies, just this year. So it's not that they weren't already out like in ridiculous amounts, but they've increased so much. This is for holding companies, trading revenue in the amounts of credit default swaps and derivatives, mortgage-backed securities. Thank you. Why bother? Can you actually see my video, or is that you talking about from the last video that I did with Jackson and them? Because I'm having trouble establishing my webcam at the moment, so I have no idea if you guys are looking at me or looking at my screen here, to be honest with you. But anyway, as you can see, that's for holding companies. That's up 1,600%. And their trading revenue is up 200%. Sorry to keep scrolling back and forth. So as you can see, they doubled, more than doubled the amount that they had in holding companies, as well as in credit derivatives up there. And then for the banks themselves, they increased the credit derivatives 3,400% and increased their total trading revenue by 56%. A lot of that is done by bilateral netting, which is an illegal practice of reselling assets, basically rehypothecating things from one bank to another. You saw my video on my webcam for a moment and it's gone? That's funny. This whole YouTube thing, I have no idea, with OBS, I have no idea how it's actually going and how it's actually working. So, see, it's giving me some issues here. So for some reason, it's just randomly switching in and out, which I don't really understand why. I might remove it as a video capture device entirely, just so it doesn't, so it keeps showing you what's on the screen. All right, I've readjusted my microphone. I hope this sounds a little bit better. I want to make sure that this is set up properly. All right, I think this is a little bit better as far as the microphone goes, right? Just increased the gain a little bit for you, so I hope it's sounding a little bit better. Anyways, if you guys have any questions about any of this stuff in particular, about any of the new filings, anything with these federal reports, there's so much to get down to that I've explained in a lot of videos, and I don't really know what people actually understand or want to know more about. You know, for example, like 189 trillion in derivatives, you know, that doesn't include all these naked shorts and synthetic shares and stuff. So in reality, that number's probably 5 times that amount. Which is really scary, because this is alone is 5 times the entire global domestic product of the world. All the money the world makes and spends in 1 year times 5. That's what this amount is. And again, it doesn't include all this cooking the books and other issues that they're playing with. All right, thank you guys. Yeah, CBJ, Jason, Oliver, Vichain, Why Bother, Nancy, Rodney, thank you guys for coming, Torin. Appreciate your patience. It didn't work out the way I expected it to, with YouTube acting up so much. But I'm actually scared to click the manage button to go and see if I cancel the other stream. I'm just going to leave that as is and work with it afterwards. But yeah, thanks for watching. You know, there's all sorts of good due diligence out there. And that's kind of how I got into this. Just kind of, I love AMC and GameStop. And I started doing more and more into this. And little did I realize that these banks are over leveraged so bad that there's almost no chance they can actually, well, there's a chance that they can stay in business if they pull some shady deals. For example, Bank of America selling off assets left and right now. But it's going to be really tough on them to not go completely underwater. Jay Powell, man, I really do think that Jay Powell he's going to come on tomorrow on the Friday Fed meeting, and he's going to say, Wednesday Fed meeting, and he's going to say that everything's fine, that the country's doing well. Excuse me, so sorry. That inflation is transitory. He's going to say all sorts of stuff to try to make everybody feel better about how the economy's recovering and COVID is subsiding. But these damn reports don't lie, guys. You know, let me close that out. That's just an example, and if you know if you can read that right there or not, but that says failures to deliver only right here, just in that $50 billion on this one table out of 11 that are on that particular. And that's the increase, by the way. It increased by $50 billion year over year. That's what these numbers are. How much it increased in 1 year for all these various liabilities. Deposit is a liability for a bank, by the way, and other trading liabilities. What's up, Dean? Like my sauce, E-boy, Ernesto. Thanks for coming by. That's awesome. I'm glad to see that you're working out. Got to stay healthy. Gary Gensler. Nancy, I like Gary Gensler a lot. He's the new head of the SEC. I think he's been on there for about 6 months now, 7 months, something like that. But Gary Gensler and 𝗗𝗶𝘀𝘀𝘀𝘀𝘀𝘀𝘀𝘀𝘀𝘀𝘀 prosecutor, they're going to do fantastic things. They've already been prosecuting people left and right. And I think that before you know it, they're going to have just stacking up bodies, per se, of these hedge funds and illegal market makers out there. Illegal activities between hedge funds and market makers. And pretty soon it's going to be Citadel's turn. It's going to be time to pay the piper. Now, I will admit that I think that his last statement that he said about doing your homework, I think that this was very... He said if someone asks a lawyer or accountant if something's over the line, maybe it's time to step back from the line. And I don't really agree with that, because everything that we're fighting against and that they're prosecuting here with these hedge funds and whatnot is completely over the line. So it feels a little bit out of touch, you know, but Gary Gensler's a rich guy. I mean, so he has a little trouble understanding that stuff. Regardless of that fact, they're still going to do great things because they have to. They have to. They have to make these changes. They've been implementing all these new regulations with NSCC and the DTCC and FINRA. They have to make these changes in order to prevent the entire stock market from collapsing. Because with the over-leveraging that's happening, they have to be able to take over. And these new filings allow them to take these assets from other hedge funds and banks and basically borrow them, use that money in order to repay, to buy back some of the shares, I should say, that they're short, and bring them up to a point where their margin requirement has been met. So that being said, instead of it entirely collapsing the whole stock market, they're trying to mitigate that and extend it over longer periods of time. What Jay Powell would call tapering, which again, we're going to hear that a lot tomorrow. Tapering and transitory are going to be talk of the day. September 1st. Yeah, September 1st, we've got some interesting things going on. I use that word a lot in this because I don't want to say crazy, but we definitely have some good NSCC filings that should be taking an effect on the 20th as well. You know where we're going to go straight to? My man Charlie's vids on this one. If you do need to look into these filings, Charlie's vids is the place to go. I mean, this guy is very good at analyzing these things and dissecting them, okay? So if you're not aware of this, for example, he even does something with a fidelity calculator, which tomorrow for AMC is showing a 63 or 64% chance of being in the green. That, regardless of that fact, I do think that we're going to be in the green tomorrow. I don't know if it's going to happen or not. We're going to start the day off pretty rough Thursday morning. We're going to see some pretty heavy shorting within the first 10 to 15 minutes of opening. And then things are going to get really crazy. And I think we're going to have another day somewhat like today. If I had to guess, how many naked shorts do I think actually exist? Asked Why Bother. All right. This is a complicated question. Okay? It really is. And the reason is because we don't know exactly how many naked shorts exist, right? We just don't. But there has been certain things that have given us an idea of how much that is. So using everything that I know, I would have to say that there are probably, we already know that for AMC there are around 500 million actual shares. Okay. And the reason that phase 5 margin requirements and the new initial margin requirements and all these other NSCC filings and stuff that go into effect have already been gone into effect or go into effect in September are important is because there's probably around 1.5 to 2.5 billion naked shorts, in my opinion, in my non-financial advice opinion. I would really not be surprised whatsoever if I saw that there was more than 2.5 billion shares of AMC out there that were synthetic. I know that sounds like a lot because it is. This shit isn't brand new. They didn't just start shorting it. You know? They didn't just start shorting it last year or 2 years ago or even in 2010. They started back in 2006 before 08 market crash. They use credit default swaps and all sorts of other securities to indirectly short these stocks, okay? And dark pools to manipulate them, for example, like they do there, to manipulate these as much as possible. And they have thought that they were going to pull a Toys R Us and Radio Shack on GameStop and AMC for so many years that they can't believe that this is happening right now because their egos are so big. Let's answer another question. Let's see. Dean Scott, Marcel, is there any other way to find out what percentage of stock we own without doing a share count? I think it's definitely over 80%, said Dean. What's up, Bookman? Oh, you can see me now. Oh, that's interesting. I have no idea what the hell's going on my screen. But that's good to know, Nancy. Thank you. Is there any way to find out what percentage of stock we own? Like the say.com, that kind of really gave us an indication of how much we own, you know. And I think that's an accurate way to figure that out. Because it shows us how many people registered for say.com. Because I know I didn't even bother registering, like linking my account. I have multiple brokerages. It's a pain in the neck. And I know a lot of other people that have a lot of shares and a lot of people that also don't have a lot of shares, but still hold on diamond hand strong, that did not link their accounts. So that being said, the actual number of people that did link their account is very low. Even still, if you take into a margin of error and reduce that number in half or cut it over 4 times over, the amounts that is shown as far as like naked shorts, the amount that is shown as like what we actually own is very, very high, is 10 times the actual float. 10 times the actual float if you divide the actual numbers given to us by say.com by 4. I'm trying to see the numbers here from Jackson Hunter's page.
Do you want to get access to some of the top stock option picks that I'm looking at each week? Each Sunday, I send out
show on YouTube.
Michael Ark, it's a good question. Dude, I do it because it helps.
But Jackson has some great information, and he did the say.com. Oh, look, that's funny. I didn't mean to pull it up. I just pulled it up to whoever who's looking at something on my page.
Maybe.
Oddly enough, that's cool. Jackson's a good guy. It's great due diligence. He was so cool to be able to bring me on his channel to discuss this stuff, you know? Because it has to be talked about, and he understands that. You know, he's a man of the people. And I'm sorry it's not in that video, even though I thought it was. This is a very interesting chart that he puts up here. And this is a cycle that is continuing to show itself, and that's why we're on this, what it seems like to be this hyperbolic upwards movement. And I'll pull that up here in a second. Also, I'll pull up on my interactive broker account if I can. I'll see if I can do that without giving away too much private information. I'm not sure if I'll be able to. But yeah, this is from the video that we did, Apes of the Round Table, with Jackson Hunter, Houston Wade, Trade Spotting, and myself. And we did talk on the share price. And Jackson did go into a little bit more depth on that as well. Just so you know, it's an hour and 20-minute long video, so I can't really go through it and look for it. So we've already, if you just use simple math, you can definitely figure out an estimate of how many people, of how much we own the float. And currently it seems like we own the float 10 times over. So if we own the float 10 times over, and institutions own the float as well, and there's naked shorts and naked calls going out left and right, that's why I think that there's well over 2 to 2.5 billion naked shorts. And again, that's just my opinion from all the analytics and research that I've done. Dean, you make a great point. Anybody outside the USA and on certain platforms could not register. That's absolutely a great point. It was very easy to register on one platform, but very difficult on many others, especially for people in like the UK and Canada and stuff like that. They could not register on the say.com no matter how much they wanted to. It would not let them. Bookman, he asks, if these slime balls control price action, then how can we explain what happened today with this gap up action? Is this just letting them run? Is this overpowering them? You know, this is actually a good point, okay? Now, I don't really think that... I'll pull up my Webull account to be able to show you better because this site sucks. So I've got a Webull, I've got IBKR, several others. But they're not controlling the price entirely, okay? They're manipulating it, but that doesn't mean that they can completely control it, okay? And especially now with these situations, today was a lot of delta hedging, very, very minimal. They're just buying shares right now, okay? Right now, why you saw this actually is because they were buying shares back, and that increased the price. And that's why we saw the price increase so fast. Then you have to include FOMO buying and a lot of algorithmic trading, okay? Which is another wonderful idea to shift over to. I can show you an example of algorithmic trading that was happening today. And it actually divides pretty perfectly, all right? All right, AMC cracked 40 bucks. You know, this was right before right after it happened. I posted it. AMC cracks 40 bucks and gets shorted right back down with a heavy short volume candle of 997, 296. Check this out. All right, I took a screenshot of this. That's that candle right there, 997, 296,000. 997,296 is the volume. Now, why that matters is because it's divisible by 8. All right, which makes it a prime number, you know, which is a prime number. So this amount divided by 8 gives you this. And when you divide them by each other, that equals 8 specifically, which is something that a computer can only run in zeros and ones, which is binary code, okay, like an algorithm. So you got 0, 1, 2, 4, 8, 16, 32, etc. Those are prime. And when you see a candle like this in the 1 minute chart of exactly just under 1 million to bring down the price because it got a little too hot at the $40 marker, that's a clear indication of the algorithm deciding that the best thing for the AI to do here is to drop more money into short positions. So that's an example of the way that they're controlling the price. And then this is a little bit more natural price action, but even still it's not, because a lot of this buy pressure is going through dark pools. So we are overwhelming the shit out of them, but they're also delta hedging and buying in dark pools. So this is big time buying that they can barely hold off, you know, with the occasional red candle, with people, very few people paper handing, and the majority of it is their actual shorting to keep the stock price manageable. Let's see, I got a couple of questions here. I don't want to leave any questions out. GA Boy asked, with around 1 billion synthetics out there, the potential for the squeeze would easily break the market. Oh, well, yes, it would. That's why this is an issue, because the other banks already owe $189 trillion in these derivatives. And any little change in the stock market, especially with all the new filings and the new margin calls, margin requirements and initial margin requirements that have been implemented and are starting on September 1st through September 20th, they're in some serious hot water here. And that's the reason for this action that we're seeing right now. Also on the 26th, this is a big piece of information for you guys. On August 26th is they've got a cycle going here, and I've got to figure out where I figured this information out. I think it was on Reddit through this guy Creand. But there's a cycle every 3 months where they've got to return these futures contracts, and they've got to do it before the 26th. So yeah, so that is definitely August 26th. So that's why the Tuesday, and I think Tuesday and Wednesday, these both today and the Wednesday the 25th are going to be really hot, because they're not done. They just didn't want to do it all in one day, because that would really create some out of control buying pressure, even more so than we're currently seeing. All right, let's go back over here. Possible exit strategies. Okay, yeah. All right, guys. possible exit strategies, like this is something that's going to move very, very, quickly. And it's going to take a few days even still, maybe longer. But the action we're going to see is going to be much more than this little stuff here. Okay, this is nothing. If you're maybe, trading some options or whatnot, then whatever, this is fine. This isn't a big deal, but it's nice to see the action going up again. But this movement here that we had back in June is what we're about to see, in my opinion. All right, this little section here is just kind of the very first day that we had right here. This would be like akin to like May 24th, in my opinion, or something like that, or May 25th. Way before this, run from $14 or $13 when we were at back then up to the 62, 55 mark or whatever the hell this is showing me here. Even though we were at 71, I don't know what the hell's going on with Google here, 72.62. I'm not liking this chart at all. I just pulled it up with the quickness because I didn't want to log in my Weeble. Possible exit strategies is I'm waiting for this thing to pop up. And it's going to pop up and do the same thing that we currently saw over and over again. It's this whole section here, from here through here. We're going to see all of this over and over again. Yeah, take a look. Bam. And a little hump. And then here we go again. And the hump. And then now we're going to go a third time. And we're going to continue to do this until we go way up and up and up the graph until all these shorts have covered. And it could take many months. It could take several weeks. And the reason I think it's going to be expedited is because of the issues going on with the government, with inflation, the real estate market, unemployment, over the worldwide, cryptocurrencies, the infrastructure bill, the debt ceiling crisis. This is going to cause real strains on the stock market, and it's going to cause these prices to go up. So when it does, you want to sell on the, well, hold on, not financial advice. In my opinion, you want to sell on the way up when it gets to numbers that are very, very high for you. If your target is, for example, in the 5 digits, and you don't want to sell until it gets up to $50,000, then you might consider selling off a very, very tiny portion when it runs up. When it runs up a good amount, a few 100% or so, to secure your investment that you originally put in and to have a little left over, for tax season, and then play with house money. And you kind of want to continue to do that multiple times over. You don't want to day trade this stock. You don't want to swing trade this stock, because that's how you'll get left behind when the thing makes a major move and you think you're going to get back in at a lower price. Next thing you know, it takes off on you and you have to buy back in, and you just lost a lot of shares. So you want to sell it when it's getting a very high number. So say you want to be at 50,000. I would sell, my first 5% of my shares at, 5,000. The next 5% of my shares at 10,000. The next 5% of my shares at the 15,000 mark. Granted, this isn't going to be something that's going to take months to get to once the initial squeeze happens. The initial squeeze could start at any moment, but once it does, it's either going to be a 1 to 2 to 3, like a multiple day thing, or even maybe a few weeks because of the new filings. They might stretch it out a little bit longer, but it shouldn't prevent the price from reaching these ridiculous price levels if a lot of people are still holding, theoretically speaking. Because the computer for the SEC and the NSCC doesn't give a shit what the price is when it's buying it back. They care only in the sense that they're trying not to destroy the entire stock market, but that doesn't mean they're trying to keep Citadel afloat. I don't really think that, even though they might have their hands in their back pocket, I don't think that Gary Gensler and them are that directly related to Citadel to give a shit if they go out of business or not. It would be a nice way for them to throw them under the bus, for example. And then the next prime broker or market maker or hedge fund would have to cover whatever's left over after they go out of business. How many counterfeit shares on GME? It's going to be the same thing or more. GameStop these are the same stock, you guys. I know that a lot of people don't like to hear this shit, but AMC and GME are the same stock, and I'll tell you why. Because they're held in many, many ETFs. Okay? Many ETFs together. So even though AMC's one stock and GME's is another stock, they're held in hundreds of ETFs concurrently. So what does that mean? Is the reason that they're in completely different sectors and they run together is because of the shorts and the illegal naked shorts that are occurring through the ETFs that these things are contained in. Let's see. I was just talking to Charlie about this on Discord. I don't know where the hell this video went. I'm sorry. Give me 1 second. I just saw it on here. It was a 13F update. There it is.
Tired of market volatility? Consider a fixed annuity from Professional Life and Casualty. Our tax-deferred fixed annuity protects your principal and guarantees a competitive return. You pay no surrender.
Okay, so check this out. So we have some 13Fs reported today. One is from Fidelity Small Cap Value Index.
On the stuff, because I could tell you about it all day, but if I'm actually showing you, I think that goes a lot further. Take a look at this. Fidelity 13F filing shows that they sold off. I don't know if you can read that, but it says they sold off Fidelity Small Cap Value Index Fund. 100% of those shares that they had. And what did they do with it? They bought back the Fidelity Mid Cap Growth Index Fund, which contained AMC and GameStop. Fidelity sold off their small cap value index fund to buy the mid cap that contains AMC and GME. I can go straight to the website, but I'll pull it straight in his video because, you know, it was his due diligence, and you got to give credit where credit is due. So I'd rather just show you directly on his video. As you can see, if you can't read that, it says Fidelity Securities Lending Cash Central Fund. This is regarding the U.S. money market fund monitor. Sorry, I just kind of spilled my beer there because I wasn't paying attention. Fidelity Securities Lending. This is from the RRP, the reverse repo. Okay, and the counterparty was the Federal Reserve. And Fidelity traded $27.1 billion today, which was 9.35% of the total RRP. Fidelity has a huge stranglehold on the reverse repurchase and this banking system right now, in a good way for them and in a bad way for the other banks like B of A, JP Morgan, and those guys, the top four, Goldman Sachs and Citigroup. So I do think that BlackRock and Fidelity are going to be the top of the food chain in the near future here. And yeah, let's see what else we got here, guys. Sorry. Let me go back to this chat here, guys. I'm sorry if I haven't read your chat again. You know, thank you all for coming out. Robert Nicholson, you know, again, Vichain, Oliver, Bookman, thank you. The 72s from After Hours. Evoy, yeah, actually, I don't think that's the case. I was there. I mean, I was in it for the 72. It was during the market hours. I remember it very, very clearly. The 72 was definitely during the market hours. Really? I do remember something over there. Maybe I'm wrong, man. Maybe I'm wrong. But I thought I did remember it being in the market. Again, you know, I smoke a lot of weed, man, so it could have just been the high 60s that I was thinking of, and then it... Anyway, let's move on. But it did hit 72 and change. That's what matters, and it's going to go way past it. I think the next level, guys, for AMC is going to be 200. I really do see 200, 190 to 215. 190 to 215 for AMC is going to be in the near future here. I think before October 1st, because they're going to argue about the infrastructure bill in Congress. They're going to argue about it so bad, and it's going to scare so many people. And this whole shit with inflation and everything, it's going to show that it's not decreasing. Okay, it's definitely increasing. You know what? Instead of that, let's go to the Federal Reserve's H8, since we're on that subject. This is the most recent Federal Reserve asset and liabilities of commercial banks reports. And this is expressed in billions. So in reality, that's that's $19 trillion at 859 billion that you're looking at right there on all these, you know. And so they're all heavy. Here's another next one, 19 trillion 899, and the list goes on. Okay, there's again 11 of these guys here. So these things, and as you can keep seeing this here, look at, like I expressed on the one table in the Excel spreadsheet earlier, year over year from July of 2020 through July of 2021, look at how much their liabilities have increased, $1.5 trillion just on this table. But their assets, that's 1.952. That's 1.9 trillion. This is 2.09 trillion. So this has only gone up by a few, 100 billion, but their liabilities went up by 1.5 trillion just on this table again. So the margin that is exponentially increasing is also, they're also being severely hurt by it because the liabilities are increasing exponentially. This is what's going to cause a margin call on these hedge funds and a domino effect of them when the debt ceiling and government issues here come up to play in the near future. See, I'm pouring my money into crypto after this. If you guys want an exit strategy, keep your cash in stable coins like US dollar or GUSD and earn 8.88% interest. I have on Celsius. I have no idea about that, brother. I'm going to show that one because it was kind of hidden. I don't know about that because I know things like Tether and other items like that. Some of them have been great, and other of them, have just disappeared from existence with hundreds of millions of dollars and billions of dollars in the past. So you do have to be careful on who you invest in with as far as the crypto that you choose to invest in and the stable coins. Like, I don't really know enough about the stable coins. I do like the idea of diversifying into other fiats as well as diversifying into crypto. But again, this infrastructure bill is really going to make some changes into the way crypto is regulated. And I don't know if that's going to have positive or negative effects on cryptocurrency itself, on the crypto itself. I have no idea. You should show blunt talk. You shoot straight and don't sugarcoat. You should call your show Blunt Talk because I shoot straight and don't sugarcoat. Okay, I like that. And Doge, Tether, Cardano. I mean, I like Cardano. I'll say that much. I really do like ADA a lot. The problem is that this stuff is so heavily regulated. It's the wild, wild west out there. Let me show you an example of this crypto manipulation. And there's nothing, you just got to work with it. You got to invest with it. Know that it's happening and do your best to use it to your advantage. Before we go there, I will show you this guy. Okay. That's that guy Astro on Twitter, and he's on YouTube as well. This is an example of one of his charts right here. He goes, which chart do you think this is? Because they look almost identical. One of these is the top one is the 2-year chart, and this is the 1.5 month chart. Check out this pattern. Check it out. It's almost identical. Just zoomed in. See this? And then the same thing. Green run up, red down, shorting, green shorting, etc. See that? And then a series of delta hedging, and then more shorts on the 2-year time frame, on a 1.5 time frame, delta hedging, shorts, and it continues on. Okay, this is all shorting action right here. Look at this, crazy. And then this run up that we have up here to the $72 mark, that's all majority FOMO and delta hedging. FOMO is running it up delta hedging is occurring here, and then FOMO is just shooting it up to obscure heights. And we're going to see this into higher and higher segments, which bigger and bigger chunks. We're going to be seeing a few more of these big runs before the mother of all short squeezes. So you can try to take advantage of that one way or another. Algorithms. Yeah, so just so you guys know, credit default swaps are up 5,000% year over year. Only 6% of the eviction moratorium money that the government is counting towards our gross domestic product for this year and is supposed to be paying people's rents and mortgages Only 6% of it's been distributed. The other 94% still sitting in the U.S. Treasury. And Janet Yellen is running out of extraordinary measures. She can't get this shit out fast enough because there's no money. Inflation's at the same level as 2008. 3 months in a row. It's higher. Right now we're at 5.4, and back then it was in the 4s. It was nuts. You know what? Let's just move straight on here. What's my choice of blunt wraps? I mean, I like shows. I like Swishers and White Owls. I don't discriminate. I love blunts. I love blunts of all kinds. Cigarillos. Except, I even like Garcia Vegas. It just depends on what you're smoking, you know. If you're smoking a really high quality herb, using Garcia Vega kind of kills a lot of the flavor because they're so, they're very on the thicker side as far as leaves go for rolling in. But yeah, RK, that's right. It does help people get an idea of the infinity loop. Like, it's an infinity loop that they're trying to use to get out of this position, and the algorithm is making it happen. It's on the 3 month chart, on the 1.5 month, the 3 month, the 6 month, the year, the 1.5 year. They all look the same, guys. They over and over and over. It's the same repeating patterns, and people are just going to keep buying it and holding it. So it's going to go higher and higher, and the longer you hold, the higher it's going to go. Not financial advice. Silhouette. Yeah, we appreciate you too. Peace and love from Chicago over to Colorado. Vichain, Backwoods? I don't know about Backwoods, but hey, to each his own, And Bavash, Dutch Masters, they're not bad at all either, I'll smoke them, that's for sure. And yeah, RK, you're right. It does show up on the smaller time frame as well. Man, I posted so many damn things here. I'm trying to go way back, but I'm going to have to go way down here because I know where it's at as far as the crypto goes. Yeah, just an example. Like when I posted these DDs on like the economy, instant regret, business, all of these, they banned me. They permanently banned me. And they said I was spamming even though I only posted it one time. It was just an excuse to ban me. I think they didn't like what my post said. Well, my due diligence, which is, versions of this one. There's been several different versions and takes on it and expansions upon expansions. Yeah, by the way, real quick, since we're on the topic, real quick, let's talk about the Phase 5. Phase 5 is a lot of fun. It's beginning September 1st. The new Phase 5 margin requirements will begin for hedge funds, and it's going to bankrupt a lot of them, especially because their overseas, holding company revenue is up so high that beginning on September 1st, any American firm that trades in the dark pools, over-the-counter means dark pools, derivatives, again, options contracts, must follow new initial margin requirements and in some cases variable margin requirements. So the new initial margin requirements are increasing the hedge funds minimums from 10K collateral to 250K. I know you're thinking, yeah, that's not a lot. Hedge funds have a lot of money, 250K is nothing. But all of these shell corporations, the hundreds and hundreds of shell corporations that are owned by Citadel, now instead of just having to have 10,000 apiece, every single one of them has to have 250,000 in collateral, cash, in the bank at any moment to meet their requirements. So that's like literally for every 4 of those, it's taking another $1 million away from Citadel and other market makers and hedge funds that are abusing the system. And then the variable margin requirements work as follows. Like firm A and firm B, like they have to post an initial margin, the 250K, for example. But then if for every derivative that exceeds a certain position amount, for let's say, for example, $50 million versus a counterparty, they both have to put up a certain amount of collateral that is dictated by these new rules. I don't know exactly how much. It depends on the dollar amount, but it's more money than ever before. And all that collateral has to remain in a segregated account. All right, so they both have to put collateral in. So both of these funds put it into a separate account. in case either of the party fails and defaults on this. And then a third party will then manage and be the custodian of this collateral and give it and distribute it as necessary. So Ken Griffin cannot put this shit in any, cannot just take stuff and put it over into any hedge fund that he's got in the Cayman Islands or the Caribbean or Brazil and say everything's fine and dandy, that it's no longer our asset, because Citadel still maintains fiduciary, that means monetary, control over those shares and assets or liabilities. So it's shutting down a huge portion of their shuffling of FTDs and shares moving and overseas. So we're going to be seeing them on the threshold security list a lot. And it's going to be kicking off things left and right in September. And then when the whole debt ceiling issue, I think, comes into play and crashes some of their other blue chip stocks, their top 10 holdings, they're going to hurt. They're going to be in a lot of pain, and we might see them other short squeezes right there and then at the end of September. I'm not saying it's going to happen, but I think that that's our best chance. And I think that it's very, very possible because it's happened so many times before. Dean Scott said, I will not be leaving millions in my broker account. They're generally only insured for around $250K. You're right about that. If you have more than $250K in your brokerage account, you got to take some of it out and put it into another account with another broker, which is fine. And if you got absurd amounts of money, then you could call certain brokers and they will insure you for more money. Rafi, my night's been great, man. I didn't expect to be up at 12:30 in the morning doing this, but I'm having a great time, just kind of hanging with you all and answering questions. I wish there's so much more that I want to talk about, and I don't just want to talk at you guys. I would much rather, speak with you and enjoy a discussion with you. So, please keep any questions you have coming. I'll do my best to keep up and answer them as best as I can. I'm not saying I've got all the answers, and I'll be honest, if I don't have an answer, I'll tell you I have no idea. Silhouette, thank you. Appreciate you too. Bavash, appreciate you for chain. Jeremy, it's not possible to be in an infinity loop. I don't mean to make people think that it's impossible to take this on forever, but they're trying to keep things under control, and eventually pretty soon it's going to get out of control. RK, yeah, RK's analysis on YouTube and Twitter has been fantastic. So what's that big grown for over 20 years, man, when I couldn't smoke anymore and switched to vapes. I don't blame you, man. I understand a good vape is nice. I just like this. I like smoking weed. I just love it. It's a great medicine. It's a fantastic medicine for me. It makes it so I don't have to take any sleeping medicine anymore, sleeping medication, and really makes me calm down on the anxiety medication. I don't have to take alprazolam as much as I used to. So that is really nice. And anyways, Bavash, thanks, man. I'm looking forward to smoking with you too. I'd like to get together with every ape. Let's have a party, I don't know, and we'll just get down. We don't have to get too crazy and go online and tell everyone in the world, but yeah, we could definitely have a nice big ape get together and just get down somewhere where it's legal. Is the end game near? Jason Cornell asks, is the end game near? I think so. Again, it sucks when you give people predictions because then they're expecting it to happen, and that's really not what my intention is here. But people that have read this due diligence it's kind of opened their eyes and gives them an insight into how bad things really are. And because it's not just the stock market, it's the debt ceiling, it's Congress on vacation, the infrastructure bill, the rent moratorium, homes are so overinflated, and this bubble is just out of control. So many people are unemployed. So many people's employment was cut down and cut back because of COVID. The GDP is extremely hurting. Imports and exports are down. GDP is down. Inflation is out of control. The treasury bills are at terrible levels, and they went negative earlier this year, and they're going to go negative again. The 3-month treasury bill, it's at 0.05%. So yeah, I do think that when the debt ceiling comes and Congress shakes shit up, it's going to scare people out of scare them out of the stock market, and it's going to cause a gigantic short squeeze, gamma squeezes, delta hedging, more gamma squeezes all the way up until maybe October 1st, And either before or on October 1st, I believe that the mother of all short squeezes will probably begin. And I don't know when it'll end. It might take a day, a week, a month. But when it starts, you'll know it, because it's not going to go up 100%. It's going to go up hundreds of percent. It's going to go up so fast, and it's going to stall because they're going to halt trading for 15 minutes. And then it's going to do it again. And then it's going to do it again and again and again and again. And you're going to be like, holy shit, should I sell? Should I sell? And you're going to see it come down, and then it's going to go back up over and over and over again as one hedge fund and the next gets margin called as they go out of business. Crazy amounts of buying back are going to happen. And when it does, it's going to show people that this is more real than they ever imagined. People are going to be buying in for the first time at $100, $500, $1,000, $5,000, maybe $10,000. So when you're getting out at $5,000 or $10,000, other people are just going to be getting in for the first time. And I think it's going to keep going. This is the first time in my life that I ever thought a stock could actually hit $99,000. I can't believe I'm saying that. But it's true. It's true. All right. Let me go back to some other pictures. I'm sorry, some other chats here. I don't want to get stuck on the one big picture here that I think. And yeah, I know Evoy Creand and I have discussed a lot on Reddit. He comments on my due diligence and I on his, and we use each other's in a proactive way to try to figure things out and give credit where credit is due always. The guy's fantastic on Reddit. There's some fabulous information out there. A lot of it's bullshit, BS. You got to be careful, but read the comments, dig deep, ask around, use common sense. You know, there's some things on Reddit, in my opinion, that aren't true, like odd lot theory. Odd lot theory bringing price action down is a bunch of bullshit. Okay, I guarantee you that. And I know guys like AMC GME will also say the same thing. Odd lot theory on Reddit is a bunch of bullshit. All right, but a lot of the other stuff on there is legit. And I believe that my DD and other people's are legitimate, and that's why places like Reddit subreddits like conspiracy and economics, stock market, etc. were all banning me. I got banned from 18 different subreddits, and only 7 of them allowed me to post onto them. So it's been a struggle. Anyways, sorry, let's move on. Do I think Sundial will go up too? I don't think Sundial's. I think Sundial's a big distraction. It is heavily shorted, but it's a big distraction, I think, to AMC and GameStop. And I think everyone's welcome to invest in anything that they like. And I like pot stocks and I like all sorts of stocks, you know, and something like Sundial appeals to me. But for me, the returns that something like Sundial would give me is nothing but a fraction of what I could get out of AMC or GameStop. And so that's why I don't think that it's worth my time. But a lot of people, if they decide that that's what they want to do, then I applaud them, and I do think it will go up. Knock on wood. Let's see. Rafi T says, every day, especially days like this, puts them in a tougher position. Eventually, they'll be forced to close out, and they won't have any other option. And that's exactly right, man. That's exactly right, Rafi. Evoy says, anyone ever tell you you look like Game Bread George Masvidal? And I never got that before up until I started going on YouTube. Then I've actually started hearing people, you know, put George Masvidal and my name in the same sentence, and I never thought in my life that would happen because, for obvious reasons, that's just kind of crazy. Whatever. It's funny. I appreciate it, Evoy. Thank you. Bookman, the ganja helps a lot, man. You know, and to each his own. You know, I have children from the age of 2 months. I got 4 girls from the age of 2 months up to 11 years. And they all know that I smoke pot, and I'll never hide it from them. You know, it's my medicine. And if they want to smoke it when they're adults, I will not encourage that, but I will not discourage that, is what I was going to say. I will not discourage that as long as they've got their life in order, their shit together, they're getting good grades, they're doing well and working, and it's not, you know, a detraction from their lifestyle. You know, if it's a detraction from their lifestyle, then it's definitely an issue. But I would never, you know, discourage my own daughters from smoking it if they're of age and it's legal. As it is here in the great state of Illinois, and which is, you know, a shitty fucking crooked state. But hey, I live here, and I'm gonna make the best of it until I decide to leave. I've got a few businesses here, logistics companies and real estate investment that I've been working on hard, and I don't plan to leave. Let's see. Yeah, I'd love to share with you guys past MOASS too. Absolutely. And developing a weed business, if you can get around the federal part of it being illegal, which it may not be for long with Biden in office, I don't care if he's in office or not, but I'm just saying he may legalize it, and that would be good federally for the pot industry. If I come to Boston, all right, man, I'm going to take you up on that. You know, some of my friends went to Harvard, and they like going to Boston a lot. I got some family over there too. Nancy asked me, what will I invest in? Hang on one second. Nancy, I want to answer your question. I'm not going to go past it. Damn, I got to move forward here. I'm so behind on the chats. I'm sorry, guys. I drag. Nancy, what will I invest in after the mother of all short squeezes? Real estate, most definitely. I will invest in the stock market, but it's going to have to be a very careful investment, and it will be in certain things that are very utilitarian and required for daily life. You know, none of this, you know, I'm not going to invest in Pinterest, for example, but I would invest in daily utility companies, gas companies, you know, wind and solar energy companies and things like that, because they are the future. And anything that has to deal with infrastructure is going to do well for the most part. Yeah, let's see. Bavash says House Democrats break internal impasse to adopt $3.5 trillion budget plan. So add that to the debt ceiling. Wait a second, Bavash, you said the House Democrats broke an internal impasse to adopt a $3.5 trillion budget plan? That's great to know. Thank you very much. We need to look this up. This is brand new, 9 hours ago, 10 hours ago from the Hill. Let's check it out. Good call, Bavash. Let's see what's happening. On Tuesday, they rallied behind a new strategy to advance Biden's economic agenda shortly after Pelosi struck a deal with a small group of moderates that was threatening to blow up leadership's plans to pass trillions of dollars in federal spending. Okay, yeah, but again, the House voted 220 to 212 to allow Democrats to begin work on a massive $3.5 trillion social benefits package. But the rule also requires the lower chamber, that's what I was about to say, the rule also requires the lower chamber to take up the Senate bipartisan $1.2 trillion infrastructure bill by September 27th. And Congress still has to vote on this on September 20th when they come back. So now it just further complicates things. I see what you're saying, Bavash. They're adding more and more layers of problems to this infrastructure bill already. House Budget Committee Chairman Yarmuth said that writing the text for some components of the $3.5 trillion, such as making changes to Medicare, will be easy to do, relatively easy to do, he said. What an out-of-touch tool, since those programs already exist. What a piece of shit. Man, these guys, they're trying to cut, I believe they're cutting Medicare. He says they're trying to expand on it, but I don't see them expanding on it without first cutting out other parts of it. They never do that. What does it say? But policy goals such as creating a new universal child care program will be much more challenging to craft because you have nothing structurally to use to implement it. Another issue that they're going to argue about. And they're going to end up taking the money from here to be able to make this work or something of those effect. Yeah, that's a great point, man. Wow. I appreciate you letting me know about this. I'm going to have to look into this a lot further here on my own later on. But this is some crazy stuff. But here you go. Pelosi pledged for months that the House would wait to vote on the infrastructure bill until this was done. And they didn't. They already voted on it, and that's fine. But now they went ahead and voted on this. They still got to vote on it on September 20th. And they agreed to a resolution coming to vote on the bipartisan infrastructure bill by September 27th. Democratic leaders also adjust the rule containing a provision to automatically deem the budget resolution as adopted, so the House wouldn't have to standalone vote on it. And hours later, they still weren't okay. They still weren't in agreement. All right, let's move on. Thanks, Bavash. Peace and love, everybody there. Let's see, check out TOBAF. Absolutely fantastic new type of herbal cigarette. Thanks, I'll check that out for sure. I'm going to bookmark that later on. Have I looked at INQD, a pot stock, like my sauce? I have not, man. I don't know enough about that company to really comment, to be honest with you. But this is a straight penny stock. And look at, if this thing was down at 18 cents and it's up here around 18 and a half, these things are very volatile. So yeah, I would just be very careful if you decide to play with something like that. That thing could go back to 10 or anything less at any moment. So I wouldn't really mess with it personally, but if you want to, I would get in and get out pretty quickly, because I wouldn't recommend messing with it. But again, I'm not a financial advisor. Maybe you make a lot of money on it. See, AMC Max Pain is 35 this week. We're going to crush that. Man, I think we're going to, 35, like, yeah, man, we're going to be testing 45. I think that they're trying to keep us under 45 by Friday if they can. So we might see another heavy run up again later on today, since it's already after midnight on Wednesday the 25th, and then possibly again on the 26th. But they're really going to work hard, I believe, on the 26th and 27th to bring it back down below 45. But again, tomorrow is going to show us what's really happening. It might be that parabolic upwards turn that we were looking at earlier. And just to kind of finish off the pattern that the algorithm's currently working. Let's see, answering some more questions here. Evoy asked, I'm sure you were able to tie unrelated events to make related. I'm not sure. Oh, 100%. I see. 104,000 in the money options we're looking at. That's fantastic. Yeah, Evoy, you asked, how do you see the coming days play out? I really think that we're going to be seeing a run up, man. I don't know how much, but tomorrow I do see a better increase. I think it goes up more so than today. The after hours was sick. You see, all this after hours buying, it was all buying back by these hedge funds. This isn't, some of this very little bit here right after 4 o'clock might have been people buying in, but the majority of this, all the rest of this, was all hedge fund action, especially this last hour, because many brokerage platforms won't let you trade in the last hour of aftermarket. This is almost exclusively for hedge funds and banks. So all this price action that we saw here, in my opinion, all this upward movement here, and then all this here was straight buying back. And whether they're buying shares, they're delta hedging. They're not closing out their positions. They're just hedging against their losses. In order to hedge against the short, which is a sale of a share, they have to buy a share back if the price starts to get out of control, so that they don't lose too much money. They're still going to lose money. They're down $1 billion today. Okay, these hedge funds are down $1 billion today. No lie, $1 billion in losses today alone, buying shit back on AMC and GameStop today. Seabass asks, during the squeeze, how would you be able to sell if the broker fails completely? Man, brother, what do you mean by fail completely? Wouldn't they just take the millions out of your accounts? It's only insured up to $250K. Seabass, I think you're saying if like for example, like say Robinhood or Webull were to fail completely, how would you sell? If they went bankrupt, their internet and apps and websites would still work. I can't speak for Robinhood because they're crooked sons of bitches, and if you're with Robinhood, I highly recommend that you leave. That's just my personal opinion. But if you're with any other broker, like Fidelity or International Brokers, which is my favorite, I don't see a problem with selling. And after you sell, you just have to wait for your money to become available, and once it is, you can withdraw it to your bank account and then distribute it amongst other bank accounts and other banks and other investment accounts as you see fit. So I don't think you have to worry about not getting your money, more so just timing things properly. That's the real important factor, in my opinion. Yeah, 1 second. I'm just trying to log into my interactive broker, see if it'll let me. See, same mindset. Yeah, can't be a hypocrite. That's right, Bavash. You can't be a hypocrite. You know, I wouldn't. If I was hiding it from them, I wouldn't be able to live with myself. You know, I can't hide something like that. It's like they know that I'll have the occasional beer. That doesn't mean that I get hammered every day. You know, and the smoking marijuana doesn't impact my lifestyle negatively. It impacts it positively because of, you know, health issues and such. Yeah, it's organic medicine. It's beautiful. Let's see. Evoy, check. Yeah, TH Ricer X7. He's got fantastic Twitter charts. He does due diligence and charts. His Twitter handle is TH Ricer X7, the number 7. Definitely check him out. Bavash says, Seabass, if your broker is at risk of failing based on their terms of service, they can do everything from just shutting down to selling your shares. And Bavash is right. Like, Robinhood can stop selling, can stop you from selling your shares. They can't stop you from buying shares. That's the problem with Robinhood, you know, and such. Let me get that off the screen. Oh, bummer. Shut it down too fast. That's not what I wanted. No, Seabass, the event is big enough to make some brokers fail, and I do think that some hedge funds and market makers and brokers will fail, prime brokers. But that doesn't mean that you're not going to get paid, because other market makers and hedge funds will cover what you need to get. You know, they'll pay for it. They'll have to. They'll be forced to by the NSCC. But that doesn't mean you're not going to get paid again. The DTCC's got, you know, $100 trillion insurance policy on top of all the other money that's in the system. I'm not saying that we're not going to get paid. I'm saying that it could collapse the system. Yes, it could collapse the stock market severely. It probably will. You know, they're just trying to slow it down. They're trying to make it a lower, less of an impact, negative impact on the system while still buying back what they have to buy back. Let's see what else we got here. YouTube's not receiving a video to maintain smooth streaming. All right, sorry if you got buffering. Will the hedge fund, Evoy asks, will the hedge fund price suppression attempt to be futile? I wouldn't say futile. I mean, it will in the end, but it's not futile because right now they're just trying to get by, and they're trying to scare people into paper handing and getting out and thinking the squeeze happened and getting out. You know, and some people will. But it's too late for them, man. It's just too late for them. In my opinion, it is futile, but that doesn't mean they're going to stop trying. You know, your entire life, everything you've worked for, and say you're you know, one of the richest people on earth, like Ken Griffin, making $38 million a month, you don't want to just give that up. You're not just going to roll over and give that up. They're going to continue to fight, and they're going to get bonuses, and they're going to take as much as they can in their own pockets before this is done, but they're still going to end up bankrupting their company and a lot of others. Bavash, yeah, the Robinhood terms of service is very shady. I'll say that much. Robinhood does sell Doge to their customers without giving them their own wallets. Absolutely true. Let's see. Seabass is with Charles Schwab. You know, I don't know much about Charles Schwab. I'm not sure if they're using payment for order flow or not. You know, I was using Webull, but because of the payment for order flow, I have some shares there, and I don't plan to buy more. So it's not negatively impacting the stock in any way. Can they stop from buying and selling? Theoretically, yes. Will they? I don't believe that Webull will. But again, they can do anything they want. Any broker can. I feel a lot more safe personally with Interactive Brokers and with Fidelity. Just personally, Interactive Brokers, for example, has been in business for 42 years. you know, and Fidelity has been in business for many years as well. Whereas Robinhood just came by overnight with their fly-by-night app over in 2015 or whenever the hell it was that they started Robinhood. And really abused payment for order flow with Citadel. You know, Vlad, the little boy from Bulgaria. Jesus. Fucking idiot. My mic audio is echoing? I'm sorry. Hold on, my dog's in the background. My stream health is poor for some reason. Sorry about that. I'm trying to figure out what's going on. Meanwhile, I'm trying to log in still. We'll see if this works. I do want to review the economic indicators for the day and see what they say. The events calendar on IBKR is one of the best in my opinion. And I didn't get quite down far enough to the crypto earlier, so I'll see if I can still find it, but it's unlikely. Good old cowboy. Oh yeah, for those that didn't know, the Ethereum name service registration for the GameStop NFT was bought for 4.1 ETH, which is a lot of money. All right, let's take a look at this. This is the interactive broker. So that is a good sign for the NFT, by the way, okay? Oh, yeah. Look at what the banks were looking like the other day. I think they're getting sold off pretty hard. Is that an indication of the times there? Check that out. Goldman Sachs, JP Morgan, Citigroup, Bank of America, Wells Fargo. The top five that owe $170 trillion in liabilities. The matrix in real time. Let me see here. Sorry again about the YouTube is not receiving enough video. I might have to cut this one short. But the stream was healthy up until out of nowhere it just really took a dive. And the stream status is kind of poor right now, so I apologize about that, you guys. Take a look a little further back. I really wanted to show this to you guys here. Oh, check this out. This is FINRA margin debt. All right, look at what happened in the 2000 stock market crash back when they had $33 trillion in liability. $33 trillion in liabilities. We went here. The red one is the margin debt, and the blue is the S&P 500. Notice the S&P 500 was higher than the margin debt all the way up until the market crash. And then this happened, and the margin debt started to creep up higher than the S&P 500. See it right here back after the 2000 market crash. And then in 07, 08, what happened? They both plummeted. The stock market, and of course the margin debt with it as well, because they lost a lot of assets and liabilities. And it just increased, and the margin here in between the margin debt and the S&P 500 has just gotten larger and larger. And here, during the 2018-2020 crash, right here in 2020, they did kind of even up a little bit. But what happened right away? from 2020 to 2021, banks increased credit default swaps by 5,000%. And now we've got this increasing again. So the same shit is going over and over again. And we're at a point here with everything that's culminating is that this can no longer continue. Now we're at $189 trillion right now, $189 trillion in liabilities derivatives. And back here, they were at 33 trillion. 33 trillion, this happened. What do you think is going to happen with 189 trillion from here? Oh, I love this guy. Gordon Johnson was talking shit about AMC, saying that it was going to go down to a penny. This guy's success rate is 54%. You might as well flip a coin, and it'll probably be more accurate than this guy. He's ranked 7,352 out of 7,600 analysts on tip ranks. This guy's garbage. He's being paid by Citadel to talk shit about AMC and GameStop. Most likely. I don't know that for a fact. That's just my opinion. Yeah, 189 trillion so far, not including the naked shorts and the FTDs and stuff. Check this out. You guys want a good example of market manipulation? Here you go. This is a perfect example of market manipulation of something called pinning on AMC, where hedge funds and market makers will take a certain number of shares and offer them up for sale for a certain price on the bid asks on the bid for purchase. Excuse me. They're a certain number of shares for purchase of the bid, and then they'll do the same thing with the ask side. And they'll bring this concurrently lower and lower and lower without actually selling these. They'll say cancel this order and this order and this order and this order here. If that probably belongs to somebody, but these other three probably belong to a hedge fund. So these three will be canceled before they're executed, so they won't actually be bought, but it'll be bringing the strike, most of the prices down. And then it'll come down a little bit further, and they'll be able to use some of these to pin the stock a little bit more. And then they can cancel some of these orders before they're actually executed. Somebody said, Vichain said, well, you want to stay away from brokers that do payment for order flow because they run your order through the dark pool. And that's exactly right. When they run your order through a dark pool, they're doing it with a bunch of other orders all together for the same certain price of a stock. They could be buying 10 million shares from another hedge fund at any price. And usually it is not going to impact the stock price the same way that not doing so. So, and plus you're directly feeding the hedge funds and the market maker that we're fighting against by staying with a stock and buying shares with a stock with a broker that uses payment for order flow. Robert Nicholson, you know it's a conspiracy theory, but look at Q posts you can find. Enjoy the show and coming soon to a theater near you quite often. I don't really know anything about that, to be honest with you. Not too familiar with that. Oh yeah, here's an example of the weekend. 3:22 p.m. my time, that's Central. So that's 4:22 p.m. Eastern time, 22 minutes after the market closed. Stock market. What did hedge funds and market makers do? They went over to Bitcoin right after they closed the markets. They took their money out of their assets and they put a bunch of it into Bitcoin and a lot of other cryptocurrencies. And from Friday, 4:22, 4:15 or 4:05 p.m., right after the market closes, they take a lot of liquidity, they pump the fucking crypto, and they dump it over the weekend, over and over again until Monday morning. Then Monday morning, before the market opens, they retract a lot of their money, put it back into their assets and stocks, and keep their profits on the side in order to be able to maintain their short positions. They use it to short the stock further. So over the weekend, they're making money. Overnight, they're making money in order to have more money the following day to bring the stock price down farther and farther to get people to paper hand. Be real time. Do I think they'll add more options range for GME and AMC? Absolutely. I absolutely think they're going to add more options range for GameStop and AMC. I just don't know exactly when that'll be. It will be once the price goes up higher, because the market maker is going to want to make money off of it. They're going to need the money that they're going to be losing money with the prices increasing. So they're going to need the money from selling call options farther out of the money as well. See, Dean Scott says, Marcel, I use IBKR around the world. Good company. Well, that's great, man. I'm glad to hear that. He says he's from Camp Lejeune, North Carolina, dual citizen with the UK and USA. Military family. Awesome. That's great, man. Thank you and your family for your sacrifice, and I appreciate you. It's good to hear that you're also having a good experience with Interactive Brokers. Yeah, Vichain, you're right. Basically, what I just showed, like they cancel orders. You know, that they can pin a stock by placing orders for purchases and for sale, and then canceling before they actually are executed, you know, without actually making any purchases or sales. But additionally, yeah, they also do run things through dark pools heavily, and that does keep the buy pressure down so that things don't get more out of hand on them. Be real time. I'm not sure on that exact range. I'm not sure on that exact range at that moment, because I was not looking at an actual chart for that one picture. I'm just kind of like going off a Google screenshot. I'm sorry, a Twitter screenshot. So it's not possible for me to tell like I was at that day. If you go for that particular date, you can find it though, of course, on any chart. But again, it's every weekend, every Friday, and that's one of the reasons why I'm scrolling back so far on my damn Twitter, is because it was so crystal clear that every single thing was negative in crypto, and nothing was happening. There was no negative news from China, for example, like there was in the past, which they used as an excuse to sell off harder. Oh, there it is. I said, come on, SEC, where's my whistleblower money? Crypto and gold dumps. Oh, yeah, this was the weekend where gold fell hard on a Saturday. Or no, it was a Friday. It's a Friday as well, yep. This is my Gemini account. It's a cryptocurrency, account. And this is obviously not what I own, but this is the price of each of these individual cryptos at that time. As you can see, they're all down 4, 5, 6, 7%. Let's go to the next page. Again, 8%, 7%, 9%. Oh, this live peer was up. It was the only one that was up. Okay. Let's go to the next page. Some of your favorites, all down. 8%, 5%, 6%. This was Friday night. At this point, it was 11:25, but I've been watching it happen all afternoon. But it's not just one crypto, it's all of them. Because they're all unregulated, they can play with all of them. And look, there's RK coming through with the Elliott Wave videos and due diligence, man. RK, TH Ricer X7, he's got some good stuff on Twitter, coming through clutch. And yeah, here's the debunking of odd lot orders, if anybody needs it. It's from AMC Bigham's. It's fantastic due diligence. You can find it on Reddit or on Twitter as well. Where's Peter's? I know I saw Peter's explanation of the gold trap. And I'll go to my LinkedIn, but I'll do that on over here, and then I'll bring it over, because I don't want to give away his information. A lot of people know this guy, Peter Hahn, from LinkedIn and Twitter. He's he's a Canadian hedge fund or bank manager, something like that. I'm pretty sure he's a hedge fund manager. Let's see. Do you think it's a trap? I get it, man. It totally could be a trap, but I just don't think that because August 26th is the end of that 3-month period for the futures contracts where they've got to settle out of them. Let me see if I can find that on Reddit, actually. Let's see. Be Real. What's up, Be Real? What's up, Susan? Hello. Silver? I mean, I like silver. I don't know about gold, but I like silver. I just don't know what's going to happen with it exactly, you know? Check this out. Okay, perfect. Look, this is Creand, my man over here, over on Super Stonk, posted August 24th, increased margin requirements from 10 to 250K. Yes, but the key here is the August 26th is the date for the futures rollover, all right? And that's really important because they're using futures in order to short these stocks as well. All right. So the increased margin is happening right before futures rollover August 26th through September 9th. All right. So we're going to see these 3-month cycles. And that's why this chart runs algorithmically repeating higher and higher levels with the buying back for AMC and GameStop on the 1.5 month, 3 month, the 6 month chart. So we're expecting the increase in margin calls, and that's going to happen. It was supposed to be introduced in 2020. They've been putting it off. You know, out of the money puts are definitely being used. The end of the quarter is rolling up. There's going to be more strain. You know, the RRP, yeah, Creand used a lot of the stuff we were talking about, a lot of stuff on our DDs there. Yeah, and the margin debt is now decreasing. Yeah, but no, this is the key thing here. With August 26th is a very important date, and then the next one will be in November. Yeah. Let me just go straight to his. Straight to his page there. I'll be real. Thanks, man. Yeah, no, Jackson are on point, dude. Houston, Wade are on point. I watch their live streams. I watch their DD every day. You know, I learn from these guys, their tweets every day. Everybody, a lot of people deserve to be listened to. And a lot of people deserve to be ignored. And it's up to you to decide who you like to work with and learn from, you know. This is the perfect explanation. So price surge from August 26th to September 9th. Again, I'm calling that to definitely happen because of the futures contracts issues. All right. They've been using these total return swaps. Total return swaps are credit default swaps. Same shit. And they're shorting AMC and GameStop, and they're using this to high short interest percentage because they're shorting these other ETFs, these other swaps, okay? Put it simple. Melvin Capital, the fuckers that are down 43% since January, and they got margin call, well, let me not go there, but Citadel recalled $500 million of their $2 billion investment in Melvin Capital just a few days ago. Why? Because Citadel needs that $500 million to be able to meet this September 1st initial margin requirement for all of their fucking shell companies. So Melvin and the other short hedge funds got overexposed by shorting it directly. That's why the short interest went up to GME to 226%, because they were directly shorting GME, and they go, holy shit, we can't do that. Everyone's going to see what we're doing. And obviously they did. Okay, so that was kind of a clear indicator for guys like Deep Fucking Value. So they use these deep in the money calls to pull the short position from Melvin and other short hedges from going under. You know, that's a really great point. And they were purchased and exercised immediately, and that becomes a synthetic. Long story short. All right. So Citadel, they don't own these shares, period. Okay. They don't own them at all. They have to open up more shorts to create more synthetics to be able to fill these calls and make sure that these aren't failure to delivers. So it's a loop. And that's why we say that it's an infinite loop, because they're trying to cover their ass over and over and over again and shorting further and further to maintain what they can until the thing goes, explodes, just pops. So Citadel's opening deep out of the money puts. DOMP stands for deep out of the money puts to hedge the short position. Deep out of the money puts are hedging against the in the money calls. And they're using total return swaps in the same effect to multiply the factor to keep the price down. So not only are they shorting AMC and GME, they got to go short all these ETFs and all these return swaps. And there's not one or two of them. There are hundreds of them, you guys. Hundreds of them. That was that one we showed you earlier, like the one from Fidelity, where Fidelity bought into earlier when they sold their small cap to buy their mid cap. That's one of those ETFs that contains GameStop and AMC that Fidelity's buying into, whereas other companies are shorting that ETF. So now they both have these total return swaps hedging their original short. So now there's 4 times the original amount of shares out. Do you see where I'm going with this? So already we're out here and there's already like 4 to 8 times the original number of shares out. And we haven't even gotten to the end of the fucking loop. And the deep out of the money puts are hedging the short. They sucked up from the short hedge funds via the in-the-money calls. So in order to hedge the risk of the swaps, they got to open up futures. And these futures contracts expire every quarter. March 19th, June 18th, September 17th, December 17th. Sorry, earlier I said November, but I misspoke. I meant to say the next futures contract date is December 17th. All right, so they have to settle these futures before the first notice day. All right, and that is August 26th, you guys. That's tomorrow, right? So we got a full trading day ahead of us today, August 25th, because it's currently 1:19 Central Time. The market, not even pre-market is open. So they have to settle these future contracts before August 26th. So it's going to cause some huge price action today, the 25th, and tomorrow, the 26th, before the end of the day. And whether they're going to increase the price tomorrow or try to short it down tomorrow after they've settled all their futures contracts, I don't know for sure. But I do know that we're looking good. That I can fucking guarantee you. We're looking really, really good for the next 2 days. And for the next month and a half. We are in great shape. I made a lot of money on my call options today. I bought them a few weeks ago when the IV was down around 155, 160. And I sold a small portion of them today. I made a good amount of money, very good amount of money off them. And I've still got tons more shares, like 90% of my position is shares. But I've still got a lot more options that I'm holding on to that don't expire until December, and I feel really great about them. They're deep out of the money right now, and I don't give a fuck because they're going to go in the money real soon, in my opinion. Let's see. Bernie was doing us a solid, said Be Real Time. He screwed the wealthy over and tried to go cheap on his bookkeeper. Yeah, Bernie Madoff is still a crook. He might have been doing himself a solid. I don't know, man. Let's go back a little bit here. Sorry, guys. I missed some of your chat. I just want to go back and read everything for you and make sure that I don't miss any of your questions. The mainstream media narrative is switching, yeah. And they didn't learn anything from 2008. Okay, not a goddamn thing. The Fed is a gang. Yeah, those are facts. Said Be Real Time and Bavash, you're right. Susan, yeah, they're the mafia in suits. Absolutely right. They're going to tax us every which way, and they're going to get theirs too. And so we got to remember, so the Fed is the mafia in suits, to an extent. So they're going to want to get their money. The IRS is going to get their money, and so is the Federal Reserve. Is going to get their tax money. So they're going to be looking to make this shit happen too. They don't want people to hold these positions for over a year, because then you're only paying. If you make over $1 million in the stock market, then you would be paying almost like a 46% or so in capital gains tax. If you make under $1 million, or if it is less than a year, it's half that, correct. So they don't want to be losing half of their tax by letting this roll on for too long. Plus, they can't anymore. They can't continue to print money to get out of the situation because it's causing inflation to go higher because the money's leaking into the stock market and it's leaking into the economy and into these banks' bank accounts, and they're so far over leveraged with it that they're dumping in the RRP every day, and it's causing the monthly and yearly and 10-year treasuries to go to record lows. So when you add that in with all the other information we know about real estate and the eviction moratorium and unemployment and COVID, things are looking very grim for the end of September. Let's see. Maybe later sentiment to movies might increase, but does it make sense why GME would run at the same time, the same pattern? Well, yeah, exactly. both the stocks, whether the companies were doing well or poorly, are running exactly the same. What does that tell you? That they're being manipulated directly and indirectly via these ETFs, these exchange traded funds that hold many of them together. Bavash says, I thought they were shorting AMC and GME via ETF by buying up the ETFs and then breaking the ETF up to go long on the other assets and short AMC GME. Bavash, there are many ways for them to abuse these ETFs and these RRP positions. I would not doubt in any way what you're saying is true. I don't know exactly how that works, but I know guys like a lot of people out there, such as yourself and Charlie's vids, are more in tune with the way that the actual manipulation of these works than even I am, and I respect the shit out of you guys for it, and I would be more than happy to learn from you on that one day soon. Definitely going to have to look into that more, but yes, they are definitely shorting these ETFs. They're definitely buying these ETFs. They're manipulating the hell out of them, and they all have to be bought back at the end of this, when this is all said and done, when the short squeezes occur. Some people, you don't think Vlad will go to jail? Yeah, probably not. Probably not. He'll probably get sent over, you know. I don't even know, man. He's got money. He's got money, and people with money are able to buy their way out of serious problems to some extent. But don't know about these cats over here anymore. I think they're done. I think they are toast. But yeah, here's an example if you guys are wondering. Look at, this is the 1 minute chart. You can see the shorting and then the buying back in little waves. And then all of a sudden there's no news, nothing happens. And then all of a sudden at, 1:07 Central Time, the fucking thing just takes off and just starts increasing. And you see these five green candles usually right really close to each other, usually only separated by 1 or 2 red candles every time that it happens. And you'll always see a series of them, always 5 or 6 red, 5 or 6 green. Whereas the real stock market that's not being manipulated does not act like that. It will have a trend usually in one way or another for the majority of the day or for several minutes at a time. Never for exactly, 5 or 6 minutes in a row, over and over and over again, This is a lot of hedging right here. Look at these volume candles. Okay, this is not a normal volume candle. Look at how much volume was here and how short this buying pressure was. Yeah, compared to the next volume candle, which was right here, it's significantly larger, as you can see here. The range was bigger as well. It went up a larger range from the end to end of the wick, the bottom of the wick to the top of the wick, compared to this candle over here, which also had similarly high volume, was half the size of the following two, of the same volume almost. So it leads me to believe that the majority of this candle was bought via payment for order flow. And the majority of these two candles that are identical, that are almost twice the size, these two candles here were purchased mostly through brokers that don't use payment for order flow, such as Fidelity and interactive brokers, etc. And at the moment, I didn't click on it. Right now, I'm not looking at the actual one, but as you can see here, this sell volume candle here was 1.68, and it's a huge red candle of shorting from 41.82. That brought us down to under 40, or I'm sorry, not under 40, but under 41. So that was a huge, massive 1.6 million. That number might even be divisible by 8. I think that's a prime number. Let's find out. 683,427 divided by 8. No, it's not. Let's see, divided by 4. Nope. So there could be a combination of things going on there, but still I would say the majority of that would be, algorithmic shorting. I don't think many people were selling off at 41.82. There's no resistance for between $40 and $52. There's no resistance. The next resistance that we currently have in our range at this moment is when we're sitting at the $45, $46 channel. The next resistance is at $52. I think we have to retest $52 tomorrow or later today, August 25th. We're going to see 5 to 15 minutes of red candles when the market opens, I believe. And then we're going to see nothing but green for the majority of the day, in my opinion. Sorry if I missed some questions. Let me get off my little tangent here, guys. I'm sorry if I was ranting. Capital gains increase due to increased retail speculation. Yeah, there's a lot of reasons why they increase capital gains. Mainly the federal government needs more money. You're right, TH. Bavash. Yeah, there's a lot of ways that they're cheating, and they're getting really seriously caught up. The chain says, you thought about opportunity zones to defer taxes and invest in your community? I have thought about opportunity zones, definitely starting your own business. But first and foremost, let me speak to your accountant. Get yourself a good certified public accountant. A good CPA is very, very important. All right, so to defer taxes, you're going to want to have an accountant help you to figure out the right way and the legal way and the proper way, basically, to make yourself not get reamed by the government. Okay, you don't want to do anything illegal. That's why you want to use a CPA, because they know the laws and they know what's legal. And you want to stay within the law, like how Gary Gensler says. Because anytime you're dealing with taxes, you want to make sure that everything's done right. So even if that the CPA might advise you it's a good idea to open up an S corporation, I think that's a great idea for very, very many people. And if they think it's a good idea for you to open up an S corporation and pay yourself through your S corporation, then that might be ideal. So you do have to see a CPA to learn more about that. There's a lot of other things that you could do to defer taxes, mostly related to business and investments and real estate. But you could use that money in real estate in some ways that allows you to write it off as a total loss almost, because you invested in real estate and now you just put it down as a down payment. So now I believe that it changes the way that you get to pay taxes on that money. Let's see what else you got here, guys. Any more questions? Like my sauce asked, boss, do you plan on splurging a bit on something after the MOASS? Well, I'll be honest with you, sauce. I've already got the in-ground pool that I'm going to have put in and I'm going to install, because I've done that in the past. I've already got it all picked out, man. I've got it all mapped out. I've got the blueprints ready to submit and all the details and the documents ready to submit to the nearby associations into the village to pull our permits to install our in-ground pool. And I'm hoping we can get it done before Chicago freezes over here in the winter, but it's unlikely. I'll probably have to do it first thing in the spring, after the ground isn't frozen. But yeah, definitely going to put a massive in-ground pool here at the house so that the kids can, of course, with a gate around it, so that the kids can go out there, have a blast, and go swimming and whatnot, and just have some friends over, just have a good time, maybe a hot tub. But that's it, really. And for me, that makes a lot of sense, because while I'm splurging, at the same time, I'm going to see, in my opinion, an 80 to 90% return on my investment in increased property value of my home. Maybe not initially, but I don't plan to sell my home, because the real estate market, in my opinion, is going to take a serious downturn here very quickly. But in the long run, if I plan to sell my house, say 2 years or more from now, I'm going to get back a vast majority of my investment on that swimming pool. So while it's splurging, it's not a depreciating asset in the way where something in the way of a McLaren would be, which, by the way, I am going to buy a motherfucking McLaren too, so no worries there. And cars like that right now, with the inflation being so high, used cars are actually maintaining their value, and mainly supercars and antique cars, they do have a good way of maintaining their value, more so than a car that's 20 years old or younger. They don't maintain their value for shit. Let's see, what else are we talking about, guys? Someone said, if everyone makes fuck you money, donate enough of it into the community and use that as a tax write-off. It's a win-win. That could be advantageous. You could help your community as a donation to, say, for example, like a nonprofit organization. Get a receipt. You write it off on your taxes. But again, ask your local CPA, because I have no idea what would be good for you in your financial situation. But that's a very, very good way to help your community and defer some tax liability or write off some taxes. And it's not tax avoidance. It's, legal ways to spend your tax money where you don't have to, instead of giving it to the government, you can give it to a nonprofit, for example. And this is not financial advice. There are certain ways you have to do this. So do speak with somebody like a certified public accountant. Don't just take my word for it, because they will advise you on the proper way to do it. Yeah, you're absolutely right, Ricer. It's a Fibonacci ratio, and that's why I think that it's going to go up to AMC is going to be trading between $195 to $215 before October 1st. So I don't know if that's going to happen, but deep down, I'm betting everything on that. That's what's going to happen because that's how I feel. Go to Citadel HQ and print your graph. Says be real time. Hell yeah, that would be a boss move. It's not that far, man. I'll drive over down to Citadel. Knock on their door. They won't let me in, but I'll fucking try. I've already thought about getting a protest permit, not to actually have a protest, but just to be able to legally have a party in front of Citadel's headquarters. Have a fucking protest permit pulled. Have everyone turn their backs to the building so we're a non-threat and just party, smoke weed, drink, have a good time, party legally, dance, whatever you want to do. And not be scared of getting kicked off the premises because everyone is just there on a legal, protest permit. It doesn't mean we actually have to protest. We can just party their fucking losses away and our MOASS winnings. Be real, getting a GT3? Yeah, GT3 RS. Man, you're right there. Now we're talking. That might be even more appealing to me than a McLaren, personally. And you're right, the McLaren reliability and maintenance is stupid expensive. And that's one of the reasons why I'm like, I do like Porsche a lot better. And damn, a Chevelle and a Nova. Sweet cars, man. You're going to be able to pick them up after this MOASS and after this real estate market tanks. You're going to be able to pick one up for cheap. Used cars are not going to be inflated for much longer, you guys. Well, maybe for a little while, since America can't seem to make new cars, but nobody can afford new cars anyway, so I take that back. Used cars are going to be inflated for quite a little while, but I think antiques and supercars are going to be cheaper. Antiques and supercars will be cheaper because less people will be able to afford them. Yeah, right, Bavash? Why not get a protest permit, go down to Citadel headquarters, downtown Chicago, right on Dearborn, post up right there, thousands of people, smoke weed. It's legal in Illinois. Get drunk, put it in a paper bag, have a good time, party, hire a DJ, get a taco truck, and just get down, man. Have people go to town. Have some people distributing waters and Gatorades. Wouldn't that be awesome? CNBC's right there on the corner. They'd be out there filming it, looking at their bosses, laughing and pointing that they just went out of business. I hear you, man. I mean, those Porsche GT3 RSs are sweet. They are awesome cars. The 911 GT3, yeah, amazing, incredible cars, totally. And that's why I was so happy to see the Volkswagen Squeeze go up to $1,000 and whatnot. This is not going to be like the Volkswagen Squeeze. This is going to be way, way more than that. Why do I still have that up there? Sorry about that. This is going to be much more than the Volkswagen Squeeze ever was, you guys. I can assure you on that. Let me see if my boy Rizzo stonks, man. He's got some great DD. I got to show this to you guys. Oh, yeah, thanks, Purple Teal. You my guy. Francisco, too. This guy's an economist. This guy is... Oh, yeah, look at this. Are you going to talk about my thread on super senior synthetic CDOs? Hell yeah, we should talk about the super senior synthetic CDOs. Francesco's an economist, dude. Okay? He's got a master's in economics from the University of Missouri, Columbia. All right? He's got a BA in economics from Queens College. This guy knows exactly what he's talking about, and he's reviewed our due diligence about the economy and everything that we've just talked about, and he says that we are like 99% accurate with everything that he believes as well. Check this out. One second, right before, hang on. That's a big brain idea, get the permit. I think so, man. It's a good idea, right? Invite Melissa Lee. Yeah, we'll invite Melissa Lee from CNBC. She could be out there with us. Maybe she'll take a hit of weed on live TV. And you had me at a taco truck. I know. But Chain's going to bring the carne asada and the chicken. Bro, that's what I'm talking about. Please bring it. Wouldn't price action in the hundreds trigger the MOASS? Papillion, I definitely think that anything over 100 could trigger the MOASS. But like I said, I don't think it's going to be a one-day thing. So when I say that we're going to get to, 195, 215 by October 1st, that doesn't mean we can't be above that or below that. That just means that I think we're going to be at or around that, somewhere around that date. And when it's going to continue to get higher after that, because they're not going to be able to just short it back down. They're going to be very, very low on liquidity, and they're not going to be able to increase their margin even more. They're going to be holding on for dear life at that point. Yeah. Volkswagen let them off the hook. I mean, Volkswagen made a shitload of money off of it, and so did a lot of people in government that owned it, and then they pieced out. And they said, okay, we made a ton of money. They sold a bunch of it, and they dropped the stock price, and they let it come back down to earth. And the same thing's going to happen with AMC, but not before it gets to, it's going to make $1,000 look like a share look like chump change. I really think that this thing's got a good chance of getting anywhere between 10,000 and 99,000. I know it sounds crazy, because it's crazy that they've been fucking shorting this shit with total return swaps and CDOs and credit default swaps since 2006, and they've just been kicking it down the can. Oh, Purple Teal's E-Boy? Hell yeah, man. You are yeah, man. I've been following you on Twitter for a while. Let's see. Francisco. Oh, thanks, man. You gave me a shout out on Twitter, but you didn't have to do that. But I appreciate you, man. Again, like you said, like real recognizes real, man. You got to give credit where credit is due. You know, like I'm giving him credit for his DD because he's got some awesome stuff here on this super synthetic senior shares and shit. He says, you guys remember from the movie The Big Short, the famous CDO, and this evolved into a synthetic CDO? And later into a synthetic CDO squared, because then they multiplied it 4, 5, 6 times, 8 times over, 16 times over. Well, we're talking about super senior synthetic CDO, created in 2013 and already used by some financial institutions. And how this super synthetic works. Goldman Sachs, for example, comes and says, Francisco, don't invest this $100 million. They'll give you $92 million in loans, and you only have to invest $8 million. And this is what these banks do with margin. All right, so they're putting $8 million of their money on, and they're getting $92 million from Goldman Sachs through this, you know, and they'll be charged less than the market, and their payment on their loans is very low. So they don't ever have to come up with this $100 million right at the front. They just have to come up with $8 million, and they're going to get $100 million in credit through $92 million in loans. So they're still receiving their $8 million investment, 3.5% return, and you know Bloomberg's estimating more. The trick here is that these super seniors, they're composed of hundreds of layers. So you'll get paid 100% if your bonds fail. Let's say from the 15 to 100 layer. Okay. So why would they go on default, right? Like, yeah, they're too big to fail, blah, blah, blah. But there's the new margin requirements imposed by the Fed on October 1. Oh, hold on. I think you made a mistake here. I think this is supposed to be September 1st. I gotta look into this real quick. But they have to pay back the investor 100% of the loan acquired plus $8 million. So the investor, in theory, never loses. They'll receive the entire $100 million back, the loan plus the $800 million. The $8 million. The $100 million back plus the $8 million that they had originally put in there. So banks had to do this to catch up liquidity after 2008. So they had to sell these super senior synthetic credit default options to each other after 2008 to regain trust on the clients that were scared of the word CDO. So like when I say that they're restructuring these tranches and repackaging them, that's literally what they're doing. They're just making new fucking shit, new words, reselling to each other as rehypothecated 10 times over shares and synthetics and default swaps. So how's this linked to the RRP, right? Right? The reverse repurchase program is a tool that the federal uses to take the liquidity out of the market, guys. So when the Fed takes money out of the market with the Fed, they're pretty much burning cash. The Fed's taking a bunch of cash and they're burning it up. They're taking these T-bills and they're burning them up, essentially burning cash. And then the next day they're trading, they're getting cash for the T-bills and vice versa. Every 24 hours. One day the Fed is the counter is the repurchase, and the next day is the reverse repurchase. So the counterparty is switching between the banks and the Fed every day. So the banks have to have all this margin on hand. Inflation is occurring so bad because of the amount of money printing that's happening. The money printing is causing this money to leak into the economy and into the banks, and it's being put into the RRP, and they have to hold on to it because they need to maintain their margin positions. So after 2008, banks did a lot of more quantitative easing, unemployment benefits, stimulus checks. This is what we were just talking about. And so they created a lot of money supply, literally what we were just talking about. So as you can see, he's explaining exactly how things were kicked down from 2008. All right, so he's like, this is how we're flooding on $4 trillion, but there's really more because they're not just CDOs anymore. They're super synthetic CDOs traded many times over on this $4 trillion. So now it's 4, 8, 16 trillion, etc. And during the pandemic, the Fed excluded bank reserves from the SLR. So basically, it was too expensive for the banks to hold that cash with inflation. And they decided to send it back to the Fed for their 0.05% return, for the one-day investment. That one day is the same investment as a three-month treasury. And it's a lot safer because if it fucking bails, oh my God, it dropped again? Holy shit, that's the 1 month. Okay, there it is. 3-month treasuries at 0.05. Sorry guys, I got scared for a second there. I was like, oh shit, it's on. But no, it's the 3-month treasuries at 0.05. Oh, what the hell's going on? Where are you at? Huh. There you go. There's a 3-month yield. Selected interest rates instruments. As of 8/23, it's at 0.05. That's the exact same amount as the one day. And they don't have to worry about this thing tanking because this thing did go down. This thing tanked really hard. And it was actually negative. Look at this right here. Thursday, March 26, 2020, during the stock market crash, it was negative 0.05. So these guys were literally losing money in their 3-month treasury bill at a rate of 0.05 negative as of that date. And that was just a short thing. The government pulled them out very quickly with quantitative easing. And they're not going to be able to do that again because inflation is out of control. And they've done it so much that it's kind of like the same thing that's going on with the short squeeze. They can only do it for so long before it becomes parabolic. Let's see. Sorry, go back to your chats here, you guys. Adam Aaron, somebody said it's not crazy, it's fact. I just hope Adam Aaron doesn't fuck it up again. Be real. I hear where you're coming from, brother, but think of it this way. Adam Aaron didn't fuck it up by selling shares. He actually did us a favor because he improved the balance sheet for AMC. So he really made AMC much more attractive than it previously was. So although it kind of hindered a little bit as to what our run-up was there, it wasn't necessarily a bad thing because now it just makes it a stronger argument for everybody who's using the fundamentals, against AMC because their fundamentals have been improving like day over day, month over month, since, the beginning of 2021. And they recently spent some of that money to buy 2 brand new theaters in LA. They were the number 2 and number 5 top grossing theaters in Los Angeles, California. That was a great move. And they've still got they got several, another $1.5 billion left over after that, after those 2 purchases. So that's an example. And they're going to use that money for other things and for paying off some debt and other acquisitions, paying rent. So the balance sheet's improving. So Adam Aaron did us a big solid by selling some shares for billions of dollars. And he also did us another solid by canceling the vote for another share sale for next year. So there's not going to be another one this year. That's great. That's great news, in my opinion. And I think it truly is. CBJ says, my family became homeless in 2008. Took our house and bankrupted my dad. After these a-holes. Yeah, CBJ. Yeah, I'm sorry. I'm sorry that happened to you. I have a lot of people that I know and friends and even some family who also were in a similar situation. And that's why I can't just sit around and pretend like I don't see a damn thing when this shit's going down and they're pretending like everything's okay. Look at this. Does it look like everything's okay? Let's look at the big time chart here. Does it look like everything's okay when from 1990, the 3-month treasury bill is just consistently dropping and dropping and dropping? What is going to happen next? You're going to tell me all of a sudden it's going to have our economy's doing so well that all of a sudden things are going to take off and these 3-month treasury bills are going to do better? No, they're going to go negative. The T-bills are worth garbage. The government's bonds are worth garbage. Nothing. Negative. Pretty soon they're going to be negative, I should say, because they were negative for several days. And yeah, interesting times ahead, my friends. And again, we got to keep in mind when this happens, it just means less liquidity for these guys. Let's see what else we got here. The 6 month is at 0.06. The 1 year is at 0.07. That's a fucking joke. You guys want to see something cool? Check this out. I can't believe the stream is so damn long. Sorry. This is the 2011 to 2021 economic data. This was an estimate that they made back in 2011. All right. They estimated what 2021 was going to be like. This is 2021, man. They were saying that the 3-month treasury bill right here was going to be worth 4.4%. That's the one that's worth 0.05 right now. All right. The 10-year treasury note that they said was 5.4%, it's worth 1.26 right now. That's the actual. Fuck it. Let's do a little DD since we're on it. None of this has been edited. I just added some colors so that you could see it a little bit better. Or so that anybody could see it a little bit better, I should say, you know. And the 3-month treasury bill is at 0.06 right now. Sorry, 5. What trash? Let's go over to the OCC quarterly derivative. No, is it that one? The quarterly report? No, it's the BIA report. We can see the unemployment rate for the second quarter 2021, advanced estimate, and annual update. This is the United States Bureau of Economic Analysis. Where's that thing at? There it is. Duh. I've looked at this so many times. Sorry. And I'm not on the right one for that. But no matter, because we're looking at the price indexes. The PCE. That's inflation, right? The PCE price index directly from the U.S. Bureau of Economic Analysis report says the price index increased 6.4%. Compared with an increase of 3.8 previous. Whoops, my bad. And they thought that it was going to be at 2%. Look at that. That's what their estimate was, 2%. And it's not just every single one of these, it's every one behind it. They're all wrong. The 10 years before this and the 10 years before that, all their estimations are wrong. And we're at a point here where their estimations are now a tenth of what they were saying they were going to be. Let's look at the core price index. The consumer price index here. Let's see where we're at here. Well, let's see, 5.7 for gross domestic purchases. And the consumer is right there as well. I think I just saw it. Not seeing that. It's specified as a separate field here. So I will look into that later on. But as you can see, this one's at 5.7% compared to 2. And this inflation for the PCE price index for the GDP is at 6.4 instead of 2. So we're much, much higher levels for inflation than they ever thought we would be at. Not even in 2008 were we at that kind of... Sorry, not even in 2008 were we at that kind of level. Did something just change? I didn't think so. Okay. 3.3%. And right now we're at 6.4. And now 3 months in a row we're at, 5.7 to 5.4%, I should say. Don't go to Forbes. Go to the Bureau of Labor Statistics. If you're looking for information like this, okay? Consumer price index is up 0.5 percentage in July. I knew that already. We all did. The CPI for everything is up. Inflation for everything. Shelter, energy, food, new vehicle indexes rise. 5.4% over the last 12 months. Not seasonally adjusted. Holy shit. So you see why things are completely out of control and like the mother of all short squeezes is damn near inevitable here? If one of these factors or another kind of chills out, it doesn't mean that the other ones aren't going to still push us over. Yeah, I'm going to save these changes. I'm going to mess with that later. Energy. Holy shit, energy's up 23.8%. I knew that, but seeing it on a chart makes it look a lot more, a lot scarier. There's your July 2020 12-month change for all items is 5.4% across the board, 3.5% for food. I know you guys have noticed it. Like bananas are no longer 40 cents a dozen. 40 cents a bunch now, or a pound. They're 60, 80 cents a pound. And gallons of milk are gone up. Everything, cereal, meat, especially. I've seen meat on sale lately. Not really, because supply chain sucks. You add that adds to inflation as well. Energy. The delivery of energy and commodities is up 23 to 41%. Look at this. Fuel is up 40%. The gas prices, they're going to keep going up. But crude futures are down, but gas prices are going up. Why? Because of inflation. That's messed up. That's messed up. Man, we haven't even touched on interactive brokers. So much cool shit to talk about. Sorry if I'm ignoring your chats, guys. That was not my intention. Let me go back to your chats. My apologies. I want to talk to you guys. And you're right, Ricer. Francisco's tweets don't get him enough attention because he doesn't showboat. He just puts out quality information, 0.07% on the 1 year is a fucking joke, Bavash. You're absolutely right, man. You're absolutely right. That's a joke to think that you can invest your money in a government bond for less than 1%. And yeah, CBJ, the margin debt that you saw from FINRA went to the moon. It really did. Let's go to the daily lineup. I am loving this interactive broker daily lineup thing, man. This thing is sweet. All right, CBJ, take care, bud. E-boy, sounds good. Yeah, here, I'm going to wrap up here 5 more minutes here with the daily lineup, and then we'll take a couple questions, and we'll be done. But let's take a look. The S&P 500 and the NASDAQ, they didn't change. They went up 0.2 and 0.5. That's not much of a change. They call that rising modestly, setting intraday and closing record highs. And what is going on here? All right. The euro and the GBP, all right, are down a little bit. The NASDAQ topped the 15,000 level for the first time ever, while the S&P flirted with 4,500. These things are at record level highs. Unbelievable that this is still going down. But it's because of inflation and the money printed. They keep pumping it back into here. So they're pumping so much of this money back into the market that they're going to keep buying more and more stocks with it. And the market is going to continue to increase until it does pop, and they have to sell off, and they lose a lot of money, etc. The risk sentiment seemed to draw support from several factors, including upbeat earnings news, better than expected new home sales data. New home sales data? Nobody's buying new homes, so who cares if that's up a little bit? Decent rebound gains in Chinese technology stocks. Yeah, because China announced good news on their end. That's evident. And yesterday's reports that the Delta variant could be peaking in the U.S. Yeah, okay, good luck with that. Despite the relative strength of the NASDAQ, there was a pro-cyclical disposition. Well, because what was up, guys? What are people investing in? Energy. Because energy's up, inflated up 40%. Energy commodities, right? So it's a good way to invest in the stock market. Well, it was. I don't know how good it's going to do when the stock market tanks. Honestly, I have no idea. The information tech, IT sector was down a little bit. Microsoft, Apple. And those are both, I believe, two of Citadel's top 10 holdings. Peace out. Dude, there's so much. They're going up because the banks have so much money. So much money. Because of the amount of money that was printed by the Fed. See, what do we have here? Underperformance of defense-oriented sectors coincided with increased risk-taking. For example, shares of GameStop and AMC rose more than 20% in the afternoon on no specific news. Exactly. The underperformance, they showed you that, if there's no news and stocks are rising 20 to 27% for AMC and GameStop, that it's for a reason. And that's because they're delta hedging on these short positions. And they're covering for these futures. Separately, Best Buy was up 8%. Palo Alto, that's good. It's all good stuff. Chinese stocks were up. The 10-year yield rose 4 basis points to 1.29. Guys, would you invest all of your money or a lot of your money to get a 1.29% return? Of course not. For 10 years, And the 2-year, the 2-year slipped even. The 2-year slipped on top of that. That's terrible. Let's see what we have here. Let's see, can we expand this? I thought I used to do that. New home sales increased 1%. 1%. That's nothing. On a year-over-year basis, which encompasses a tough pandemic comparison, new home sales were down 27%. Look at this. If you think so they're playing with the words here on the reports because the new home sales increased to 1% from last month, but they're still down 27% from last year. Guys, new home sales are still down 27% from last year. Does that sound like a strong market to you? No, they're just playing with the words and saying that new home sales increased 1% for the month from last month. Webcams. I got to get them out of here real quick. Hold on. Remove. How do I get rid of this person? Put user in timeout? Yeah, I'll put him in timeout. Okay, this user's messages will be hidden. Perfect. That works. So don't worry about that spam. That won't be there. All right, Thricer, have a good night. I'm just going to wrap up here. That's pretty much the end of everything that we've got here. We went through everything pretty in depth, and we can go ahead later on to talk more on another stream. But yeah, these year-to-date highs for the S&P and the Russell and the Dow and the Nasdaq are not going to be up there for very much longer. No way. Let's see what this event calendar for Tuesday held. Actuals. What are we looking at? United Kingdom. Actual distributive trades was up slightly. Bank lending in Hungary was up. New home sales 1%. That's garbage. Okay. 0.71 million. Rich Fed services. Interesting. It's up a little bit here. Take a look at the day. Yeah, that's about it for that. All right, let's see what's going on for Thursday. Is there anything worth noting here? Looks like Iceland central bank deposits, Brazil's monthly activity for Mexico is coming out. GDP for Mexico is coming out today, Wednesday, August 25th. Yeah, all sorts of good information. Durable goods from the United States is going to report today. Durable goods is like restaurants, like takeout food and things like that. You know, ex-defense is non-military spending, for example, COVID spending, Ukraine industrial output. We'll be seeing all these later today and seeing what whether oil stocks are going up, industrial output for various countries are increasing, and the euro, and the COVID futures and the deaths in Europe as well. That will be released later today. So we'll take a look at that tomorrow or this afternoon. I guess on that note, I will give a shout out one more time to IBKR. I think they're a fantastic broker. They don't do payment for order flow. I don't get paid by them, or I'm not sponsored by them in any way and not affiliated with anybody. I just do this because I think people deserve to know, and I like IBKR, and I think they're a good broker. They've been in business for 42 years. Not financial advice. That's it for me. Everybody, you have a great night. Thank you all for listening. Tomorrow, or Wednesday, the 25th, I am really looking forward to it. I think we already talked about what we think is going to happen. I think it's going to be a great, beautiful green day. So have a great night. Have a great day. Happy trading, everybody.